My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you a little money. My job is not just to entertain, but to educate, teach. Call me at 1-800-743-CBC. Tweet me at Jim Cramer. I think we might be approaching that very special moment that happens after a huge run. That moment where you say, what the heck am I doing? I just made a fortune, and I haven't taken anything off the table. After a good day, where the Dow gained 243 points, S&P climbed 0.53% to a new all-time high, Nasdaq advanced 0.18%, I think we're pretty much there. And I am glad I am talking about this on an up day. Because if I spouted these same lines after a big downturn, you would justify me saying, thanks, Cramer, for nothing. Whenever we get these rarefied moments, you know what? It's time for a gut check. It means you need to do some trimming. Purely because your profits don't count until you ring the register. You don't make any money until you take it off. Right now, we don't even seem to know that we're being greedy. We're just so darn slap happy. We forget Mrs. Cramer's first law. My late mom, who loved the ponies and the slots, had an ironclad rule. I mean, just boom. When you scored a big hit, you headed out of Caesars or the Liberty Bell racetrack as fast as you could, and you went and bought a beautiful cashmere sweater so you had something tangible to show for it. Let me ask you, have you bought your cashmere sweater yet? My Chapel Trust, I can't buy sweaters. We give away the winnings, $3 million worth. But I had a Mrs. Cramer experience these last 2 days. Trust-owned Caterpillar, great company. For a while we owed it. It had been a vicious tug-of-war between the bulls and the bears. Ages. There were so many short sellers in CAT, so many analysts who did everything they could to knock it down. Knock down the stock with phantom worries and bogus concerns about inventory that it did become a totally beleaguering holding. But when the Fed pivoted back in November, when it said that it might have to cut rates, not in so many words, but that was certainly the intent, Caterpillar stock, well, it zoomed. It took off. It ran over the shorts like an 18-wheeler Peterbilt running over a squirrel at 80 miles an hour on the Jersey Turnpike. CAT roared higher, the 240s, the 250s, the 260s, the 270s, the 280s, the 290s. And all I said was, here I come, 300, get out of my way. And then yesterday it happened. Yesterday brought us DuPont, the classic industrial, the pre-announced weekly expected numbers with an even worse outlook for the current quarter. When I read the release, I said, oops, here comes the 10-point club. And, you know, I'm usually pretty good at assessing how bad the pain is
House of pain.
When my trust owns a position. Bam! If you own the stock of DuPont, you did not pass go. You did not collect $200. You lost 10 points. So we told members of the club at our monthly meeting yesterday it was time to ring the register on some CAT. Just sell half of the stock at a very big gain. We downgraded it from a 1 to a 2 because we didn't want to repeat the DuPont experience and give up a gain not taken, even though DuPont and CAT really aren't together. It has to do with your mind. Hey, mind you, we knew nothing about how Caterpillar is actually doing. I can't tell you. The company doesn't report till February 5th. We know that oil and gas, an important end market, hasn't been strong. We know that the biggest construction projects in the country are plants that export liquefied natural gas, and anything fossil fuel related is dicey with Biden and the White House. Data center builds are still strong. That's terrific. Most important, we bought CAT for infrastructure orders from Washington, which it'll get. But the main reason we owned it was that we thought that the Fed might cut rates a whole bunch of times, and this stock would benefit mightily each time, even as in this particular quarter, it's been since 2017 since the stock has actually gone higher after they announced. I don't like those odds. We're starting to see numbers out of the economy, numbers that are so hot, like today's GDP north of 3%, that I now believe the report's hinting that the next step might be tightening, not loosening. You're going to actually hear something like that. Believe me, there'll be people say, hey, you know what? They made the wrong move. Yeah, I think perhaps the Fed did declare victory in the fight against inflation too early. At least they haven't started cutting so they won't look bad. But you know what we did? we sold half our position in CAT. Now, today I came in and I saw the stock of Humana get crushed because the health insurer made a mockery of the consensus earnings estimates, and the forecast was truly hideous. In response, Humana stock lost $47, almost 12% of its value. It's a disaster of almost unfathomable proportions that makes the Tesla shortfall look like a slight miss. More on that later. I told Jeff Marks, my partner for the investing club, that we had to dump the rest of our CAT. Something new? He said no. But we had just sold Humana last week, and I was saying that there, but the grace of God, we didn't get hit by that nasty 18-wheeler. So we took the huge gain in CAT and bought the proverbial sweater. Of course, the stock jumped 3.5% today in response to some good orders from United Rentals, which uses equipment similar to CAT. But we caught some of that gain on the go out. I got nothing I'm ashamed about. Long term, I think it's the right call. Hey, by the way, you never get hurt taking a profit. We're seeing other signs of the whole thing being a little too much, aren't we? This morning, the new CEO of PayPal, Alex Chriss, who moved up his stock from 58 to 65 on talk of shocking the street with new initiatives, shocking them. Well, he came out and said that it's the age of AI, not unlike Aquarius, I'm starting to think, the age of AI to enhance the checkout experience. I figured, let's see, he mentioned AI, that's probably worth about 5. And I shouted over, I said to Ben Stoto, hey, did he mention NVIDIA's Jensen Huang? That's worth 8. But Chris did not have a picture of him with Jensen. He didn't even have his digital twin. And his AI initiative might be used in ways that end up competing with Apple. So you know what happened? The stock went down, actually went down, even after mentioning AI. Can you imagine? Oh, no, I said to myself. No more cashmere sweaters for you, PayPal shareholders. To make matters worse, ServiceNow, which is an actual AI adopter in a big way, big enough that it could be making as many as $1 billion from AI this year, saw its stock soar this morning before giving up most of its gains by the end of the session. Now, ServiceNow is still a winner. It's real. It's got proper AI. But it had run a great deal in the quarter, and it's up huge year over year. No wonder people rang the register. That makes sense. And it's not just stocks. By the way, we've seen Bitcoin double in anticipation of being wrapped up into an ETP, that's a cousin of ETFs, that was supposed to bring in many, many new investors. Billions upon billions of dollars came in to run ahead of the suckers who would buy the ETP when it was launched. But you know what? Here's one that shocked me. A sucker isn't born every minute. The launch has been tepid, to say the least. In fact, there's been an actual outflow of crypto ETP money for the past few days. Overall, less than $1 billion of net new money has come in to these new spot Bitcoin ETPs since they started trading 2 weeks ago, when people thought there would be tens of billions of dollars coming in. You know, the entire market cap of Bitcoin was $487 billion on June 14th when BlackRock filed for their ETP, and then it rallied to $920 billion right before the spot ETP started trading, as Bitcoiners all over the world ran ahead of all the suckers who were supposed to come in and take them out of the trade. Well, now Bitcoin's up huge amount, and the expected boom is a bust. That means Bitcoin speculators are up huge, and the legendary Larry Williams, who predicted the exact top, is now saying that people are getting still one more chance to sell Bitcoin. But then it's all over but the shouting. Man, you know what? You can buy a lot of cashmere sweaters, a whole closet of them with that pricey Bitcoin. But the bottom line, as Wall Street increasingly realizes it's time to ring the register, ka-ching, ka-ching, I'm begging you to take something off the table if you haven't done so already. It's the disciplined thing to do. I am not saying sell everything. I am not saying get out now. I am saying do a little schnitzeling, and you will regret it. Austin in Pennsylvania. Austin.
Booyah, chill man. How are you?
Chill man doing well because it's almost the weekend, and I've got nothing lined up.
Oh, I hear you on that one. A relaxing weekend.
Yeah, well, none of my teams are involved. Okay, although I, hail to the Chiefs, and I do like the general manager of the Ravens, who's a really good guy, and he watches the show. How you doing there? Go ahead. I'm sorry.
Good. So my question's on this Pacific Northwest Regional Bank. It's been on my watch list for a while, but it had a very concerning quarterly readout yesterday. What are your thoughts on Columbia banking system moving forward?
Wow. What the heck happened there? That stock went down too much. It yields 7%. I don't like that. That's a very high yield. It makes me want to look deeper and deeper and deeper, and the Puget Sound region is doing quite well. I think this calls for more scrutiny. All right, as more people on Wall Street realize it's time to ring the register, I'm begging you to just take off a little for me. Just say, oh, it's Jim. He's telling me to go buy a sweater. I love TJX, but get a little more expensive sweater, okay? On Mad Money tonight, it's suddenly gotten complicated in the industrial space. But against the hazy backdrop for the industry, I'm focusing on one player in the space that stood out all week. I'll reveal the name just ahead. Then, with all eyes on AI, I'll reveal how two companies, ServiceNow and IBM, are really banking on the trend. Plus, could ResMed's recent earnings put investor concerns surrounding GLP-1 competition to bed? I'm talking to the CEO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.